The past week has been nothing short of electric for the cryptocurrency market. Prices across the board has surged. And while many are quick to chalk this up to technical breakouts or market momentum, the real fuel behind this rally isn't just charts and patterns. It's policy. For the first time in months, we're seeing a wave of favorable political and regulatory developments hitting the industry all at once, creating what I'd call policy tailwinds that are lifting the entire market higher now. I know a lot of you watching have been through the roller coaster that is crypto. You've seen the fake outs, the flash crashes, the pump and dumps, and the regulatory FUD that seems to come out of nowhere just when things are starting to look good. But this feels different. This rally is coming on the back of something that has real staying power, changes in the political and regulatory environment that could define the next chapter for digital assets. We've got bipartisan momentum in Washington for crypto clarity. Central banks around the world softening their stance on blockchain adoption, and even whispers from the White House that crypto innovation is something America should lead on, not suppress. And all of this is happening while key court battles, like the Ripple versus SEC saga, are finally drawing to a close, removing massive clouds of uncertainty that have been hanging over the market for years. Let's start with the US, because whether you like it or not, what happens in Washington still has a massive impact on global crypto markets. Just last week, multiple members of Congress, both Democrats and Republicans, voiced strong support for establishing clear digital asset regulations. This is huge because it's not just one side of the political spectrum talking anymore. The message is becoming bipartisan. Crypto is here to stay, and the rules of the game need to be defined so that innovation isn't suffocated. One of the most bullish signals came from a House Financial Services Committee hearing, where lawmakers grilled regulators not on why crypto exists, but on why the rules aren't clear yet. That's a total shift in tone from just a year ago, when most hearings were focused on whether crypto was a threat to the financial system. Now, the tone is more like we know it's here, we know it's growing, and we need to give it a framework to thrive. At the same time, the SEC, which has been the primary source of regulatory headaches for the industry, has faced growing pressure to back down from its regulation by enforcement approach. The recent conclusion of high-profile cases, like the Ripple lawsuit, is being seen by many as the beginning of the end for the SEC aggressive stance. In the Ripple case, XRP was officially given clarity that its trading on secondary markets is not a security. And that kind of precedent can have ripple effects, no pun intended, across the entire industry. Over in the Senate, there's even talk of introducing a Digital Commodity Exchange Act, which would officially classify most cryptocurrencies as commodities under the CFTC jurisdiction, rather than securities under the SEC. If that happens, we could see a completely different regulatory landscape, one that's far friendlier to innovation and less hostile toward crypto companies operating in the US. And here's why this matters for prices. The number one thing holding back big institutional money from flooding into crypto has been regulatory uncertainty. Hedge funds, pension funds, and even large corporate treasuries have been hesitant to dive in headfirst because they don't want to deal with lawsuits or unclear rules. But if these policy tailwinds keep blowing, that wall of money that's been sitting on the sidelines could finally start to move. But it's not just the US and Europe. The markets and crypto assets regulation framework is moving full steam ahead, with clear rules for stablecoins, crypto exchanges, and custody providers. Unlike the US, Europe is signaling that it wants to attract crypto businesses rather than push them away. We're already seeing companies relocate or expand operations into jurisdictions where they can operate with legal certainty. Asia is also coming back into the picture in a big way. Hong Kong is opening its doors to retail crypto trading again. Singapore continues to position itself as a fintech hub, and even Japan is loosening some of its restrictions to make it easier for exchanges to list new tokens. All of this is creating a global atmosphere where crypto isn't being treated like a dangerous experiment anymore, but as a legitimate part of the financial system. Now, let's talk about market reaction. Bitcoin has been leading the charge, reclaiming key resistance levels and putting the $70,000 range back into sight. Ethereum is showing strength as well, with developers making progress on scaling upgrades that could make it even more attractive to institutional players, and of course, all coins are starting to heat up, especially those with strong fundamentals and clear regulatory standing. One of the clearest beneficiaries of this policy-driven rally has been XRP. After months of being weighed down by the SEC case, it's now moving with more freedom, with traders feeling confident that the worst is behind it. The price recently broke through psychological barriers, and the trading volume has been surging as both retail and institutional players jump back. In another area seeing major inflows is the DeFi sector, with more regulators acknowledging that decentralized finance is not going away. Projects with strong governance, transparency, and security measures are starting to attract attention again. This could be the beginning of a DeFi revival, especially if the regulatory clarity continues to improve. But here's the thing. These rallies are not just about speculation anymore. They're about confidence. For years, the crypto industry has operated under a cloud of fear that regulators could shut it down or make it impossible to operate. Every bullish run felt like it was one bad headline away from collapsing. Now, the tone has shifted for the first time in a long time. It feels like the political and regulatory winds are blowing in our favor. That doesn't mean we're out of the woods entirely. There are still potential risks on the horizon: new tax reporting requirements, potential restrictions on privacy coins, and ongoing debates about stablecoin regulation. But compared to the constant barrage of negative headlines we've had over the past 2 years, this is a breath of fresh air. If these policy tailwinds hold, we could see the market enter a sustained bullish phase, one driven not just by hype, but by real-world adoption and institutional participation. Think about it: with clear rules, banks can offer crypto services without fear of violating regulations. Public companies can hold Bitcoin or other digital assets on their balance sheets without worrying about accounting nightmares. And retail investors can trade without constantly looking over their shoulder for the next piece of bad news. The other thing to keep in mind is timing. We're heading into an election season in the US, and crypto has quietly become a political issue. Candidates are realizing that millions of Americans own crypto, and those votes matter. No one wants to be seen as the anti-innovation candidate, and that could mean more pro-crypto rhetoric from both sides in the months ahead. Combine that with the Bitcoin halving cycle, ongoing global inflation concerns, and the growing acceptance of blockchain technology across industries, and you have a recipe for something much bigger than a short-term rally. This could be the start of a multi-year bull market, one built on stronger foundations than the speculative bubbles of the past. So, as always, stay informed, stay disciplined, and don't get swept away by hype alone. The markets are moving, but the smartest moves come from understanding why they're moving.